I think if you're China today, if you're BYD or Neo or Zeekr or Xpeng or any one of those guys, um, the path of least resistance is still to sell into emerging markets. It's still to sell into emerging markets because what you offer is really an automobile at a lower price point. China is the place where the future is being built, and we may wish that it wasn't the case, uh, but we have to live in the world as it is, not as we wish it is. We still run around thinking that our national health care is the best thing in the world, and that our army is super strong, and that our school system is terrific. Um, but the reality is, we're slipping and slipping fast. And now I think the fall of the Great Wall of China, the Great Internet Wall, will make that very obvious to a lot of countries. These are the conditions that you wait for, that you only get a few times in your career. Very cheap valuations, very low interest rates, and massive policy support. Bond yields that are so low that every Chinese institution really has no choice but now to sell bonds to buy equities. And whether your pension funds, your insurance companies, etc. And everybody is saying, no, I don't want any of that. I want some US equities. I want myself some Microsoft trading at 40 times earnings and 15 times sales because, God forbid that I look at, Alibaba or JD that are trading at roughly, just 2 times the amount of cash that they have on their balance sheets and 6 times cash flow. So the opportunity set right now in the Chinese equity market, frankly, couldn't be better. And by the way, you look at, President Trump has, has tried, I think, to repair the relationship. You're seeing it with the whole TikTok thing. Consider Xi Jinping a friend, while Biden kept calling him a dictator. So, there's a number of reasons to think that the relationship was really, really bad, and hopefully it improves from here. You've seen the meme, right? Where you've got an American guy saying, "Oh my God, I can't believe everything my government told me about China was a lie," and then you've got
Yeah,
a Chinese girl that says, "Oh my God, I can't believe everything my government told me about the U.S. was true." Uh,
yeah.
I love that meme.
Yeah, fantastic. Welcome, everybody. Very honored and grateful to have Louis here today from Gavekal Research. And this should be a very fun and interesting and valuable interview and episode today. We are going to discuss a whole range of topics from Chinese macroeconomics, the whole US-China relations, but also Chinese equities and the outlook there. I think, without further ado from my side, please introduce yourself with your own words in a bit. And by the way, I think you are currently in Hong Kong, right? So I just returned from Hong Kong in December. And how are things over there? Is China collapsing?
Yeah. Well, guten Tag. Thanks a lot for having me. That's about the extent of my German. I'm afraid we're gonna have to do this in English. But it's a real pleasure to be here. Thanks a lot for having me on your show. Yeah, no, I'm calling from Hong Kong right now, where things are definitely calm. Hong Kong is a big financial city. Hong Kong doesn't die, but lives really on the back of the IPO markets, the debt issuance market. The banks are very prominent in town, and the reality is, the IPO market's been dead for 4 or 5 years. I can't even remember the last big Chinese IPO. And same story for the debt markets. They've been completely dead for a while. So no, things in Hong Kong are super, super quiet. But I think there's a little more optimism, a little more enthusiasm in town. Obviously, the Chinese equity markets seem to have bottomed. A lot of the Chinese economic data seems to be bottoming, and so I'm not going to say that this people are popping open the champagne around town, because that's clearly not the case. But at the margin, things are a lot less gloomy, I think, than they were a year ago. As you can probably tell from my name, I'm French. I grew up in Paris. I went to the United States for college, and I also went and spent a year in China. I was learning Chinese. I started Chinese, um, in high school, and then kept it up in college. Went off to China in at Nanjing University. which is it's actually a decent size. It's a first tier city that back then was about 4 hours away by train from Shanghai, and now it's like an hour by train. Um, and it used to be the capital, uh, of Chiang Kai-shek before it was taken over by the Japanese. In any event, so that sort of began my love story with China. Sort of fell in love with the place, even though arguably China in the 1990s was massively different than what China is today. I went back to France. I was an officer in the army for a couple of years in the French army in mountain infantry. Then I went to work for Paribas, which before it got taken over by BNP, and I was just an investment analyst there in Paris. And my boss, Paribas, took over a an Asian broker pretty much at the worst possible time in June '97, just before the Asian crisis. And they sent me out. Well, my boss was sent to do the integration. He said, "Hey, look, you speak Chinese, you speak English, you should come with me." Um, and so I was delighted to get back, and I've basically lived in Hong Kong ever since. And at this stage, I've actually lived in Hong Kong more than I've lived anywhere else. So I consider this home. This is where most of my friends are. I got married. My 4 kids were born here. Um, so yeah, so I started after a few years. I left Paribas. I started my own business. Started as a research firm. Then we built an institutional money management arm, and then we built a private wealth arm. So today, Gavekal, the business that I run, really has sort of three separate silos: in research with a heavy slant on China, institutional money management with a heavy slant on Pan Asia, and private wealth, which is much more global.
Fantastic. And it's really great to have you on the channel today, which is kind of almost the first working day for the Trump administration, right? And I remember watching your videos late last year, where you've been, well, we didn't know who's going to be the president yet. And you basically gave an outlook and saying like Trump may actually not be that bad, or Trump 2.0, I should say, may actually not be that bad for China as most people out there, actually the mass media and is basically assuming at this point in time. Now we can get your updated views, I hope, because now we know he's for sure the president. Plus, we know the first people nominated in his administration, right? And I'm wondering, like, whether or not, with, for example, Mark Rubio and such, would you change your views and say, well, there's still lots of China hawks and you know uh, quite a quite a negative outlook for U.S.-China relations again, or would you rather still say, well, there is potential in what you could call this kind of Trump-China deal in the future?
Yeah, I'm quietly optimistic. Look, I'm not going to bang the table because at the end of the day, I'm not even sure. Like, it's very hard to know what Trump will do. I think even his closest advisors don't know. I'm not sure even Trump knows himself, perhaps. But so it's I'm not going to go out on a massive limb and say, oh yeah, it's definitely happening. What I do note is that the bigger protectionists, the bigger China hawks, people like Robert Lighthizer, were not put in the cabinet. And then most of the guys who were put in key economic roles. Tend to be guys who aren't big isolationists and aren't big anti-China guys. Obviously Scott Bessent at the Treasury is a prime example, but Elon Musk seems to be very close to the president, and he's got huge business interests in China. People like Bobby Kennedy Jr., like Tulsi Gabbard, they're that are in important positions as well. They're not like rabid anti-China hawks. In fact, really, the perhaps the only you know big China hawk, to your point, is the Secretary of State Marco Rubio, um, and even he had his position has changed somewhat. Um, his position, if you go back 5, 6 years ago, his speeches were all about how China's stealing all the intellectual property and they're a terrible actor, etc. And now, in his testimony to Congress, but again, he published a big report back in September where he was like, forget the theft of intellectual property. Like, we're past that now. Like, China is actually there's a certain, at least, cognizance and realization of where the U.S.-China relationship really lies. And he comes out and says, look, China's now leapfrogged us in industry after industry. So they're not really looking to steal our trade secrets anymore. And it's almost we're getting to the reverse, where we need them to come here and build car factories here. Um, a little bit like what Germany's been doing, doing joint venture deals with the Chinese automakers under the realization of, okay, we've been leapfrogged and now we need to catch up. So, it's, I think the potential for a rapprochement, or at least an end to this Cold War that really started in 2018. I think the odds are pretty decent that this unfolds. I think that when it comes to the diplomatic service, the Biden administration was an absolute disaster. It was, and I think that the track record speaks for itself. Wars everywhere. I find it absolutely mind blowing that the Secretary of State of uh, of the United States didn't meet his Russian counterpart in the past 4 years. What's the point of a diplomacy if you don't talk to people you disagree with? The whole point of a diplomacy, you don't need a Secretary of State to go meet, the French and the American and the German allies. Like you can pick up your phone and do that yourself. Um, the so the lack of diplomacy in the U.S. And by the way, when you look at the U.S.-China relationship, President Biden was the first president since since um, since Richard Nixon to not visit China. As Jake Sullivan, his national security advisor, visited China once, and this was back in November after the election. It was already done. So there's been a complete lack of diplomacy in the U.S.-China relationship, in the U.S.-Russia relationship, um, and I think it can only improve from that. When Biden was elected, sorry, you had the Anchorage summit shortly thereafter, and essentially Sullivan and Anthony Blinken showed up and said, "Look," and told the Chinese, "Look, you're not a democracy. We only want to deal with democracies. We don't like you. We think you're a repressive regime. We think Xi Jinping's a dictator." At which point the Chinese said, "Okay, well, you could have told us this over the phone. This is a short meeting. Why did we fly 12 hours for this?" And so yeah, I think it will improve from that. And by the way, you look at President Trump has you know has tried, I think, to repair the relationship. You're seeing it with the whole TikTok thing. He invited the TikTok CEO to Congress. He invited Xi Jinping to his inauguration. Xi Jinping didn't go, but he did send his vice president, Han Zhang. Um, you've seen President Trump come out and says that he would love to have an invitation to visit China. Um, you've seen, he's gone out of his way to say that he considers Xi Jinping a friend, while Biden kept calling him a dictator. So, there's a number of there's a number of reasons to think that the relationship was really bad, and hopefully it improves from here.
Yeah, no, I totally agree. Also, like if we just look at the facts, the Biden administration has launched more sanctions on Chinese entities and yeah, and companies than the Trump administration ever has done. So it's been really yeah, a very tough grip on China in general. And I agree also with the ideological point, which is like a key differentiator compared to Trump, which possibly is more transactional and also just wants to strike a deal with China in a sense. One anecdote I found quite funny is that this week we got the news that Trump is considering gradually increasing tariffs. And I think something that you mentioned already back in November last year, but now we get the news on the Bloomberg tickers and whatever. It's funny to see that. So I think oftentimes this whole China investment sphere is a huge arbitrage trade as well, because there is so much misinformation and different takes out there that really don't resonate that well with what's actually going on. And again, that's why I bring people like you on the channel who I think have more knowledge on the ground and also a contrarian take here. And still, I think it takes a lot for Chinese valuations to normalize again and for China to become deemed investable again. One thing that I'm personally looking at is hopefully also with Trump, an end to the Ukraine war, as he promised. He invested lots of political capital in that. And I think that by itself would lift a lot on the Chinese equities part already, if possibly maybe some of the passive and active fund managers can get back into an allocation with China. But before we talk more about Chinese equities, I'd like to get your views, because I think that's also lots of your expertise on the bonds market. And not only we've got US rates going higher and higher since Trump has been announced president, but also Chinese yields dropping, and of course everybody's screaming like something's not right in China. What's your view on what's going on in global bond markets?
Yeah, I think it's fascinating actually that as Chinese bond yields dropped, everybody's like, "Oh my God, China must be facing a disaster and it's going to implode and this is terrible, etc." And you know, I, I'm a little baffled by this line of thinking in that how many emerging markets in your career have you known that have imploded with falling yields? Like when emerging markets hit the wall, yields go up; they don't go down. Um, so no, I think what's to your point, if you look at think at the past, well, really since late September, the spread between U.S. and Chinese bond has widened by 160 basis points. Now, this now means that you're in an environment where in the U.S. you have, you know, pretty expensive stock market. It's in the top 10% of its valuation range. So very expensive stocks in the U.S., very concentrated stock market, massive uncertainty when it comes to policy because nobody is quite sure what Trump will do or how the Fed will react to it. Um, and you indeed have bond yields that rise every day. Now, bond yields that rise every day are a massive headwind for asset prices, whether real estate, whether equities, etc. It's the more yields rise, the more bonds become attractive, the more capital flows from one to the next. Um, in China today, you pretty much have exactly the mirror image. You have very cheap equities. You have very clear policy drivers. The government has come out and said, look, we're easing fiscal policy, we're easing monetary policy until growth reaccelerates. And I mean, they've come out. They said we're doing 500 billion this month. If it's not enough, renminbi. If it's not enough, we'll do another 500 billion, and then after that, there's another 500 billion. They couldn't have been clearer. And you've got interest rates that fall every day. Now everybody's like, oh my God, it's terrible. Interest rates are falling. Why are interest rates falling? The PBOC balance sheet is expanding very rapidly. They're out there, they're doing QE. I mean, they're not out there saying, look, we're doing QE, but that is exactly what they're doing. They're doing quantitative easing. They're pushing a lot of money in the system, and they're doing it by, going out and buying government bonds. And the US and the Chinese budget deficit is expanding, and the central bank is buying these bonds. Now, we've seen this very setup in the US in 2009, 2010. And back in 2009, 2010, everybody was, jumping up and down saying, oh, it's Japanification, it's a new normal. US is, it's going to be 10 wasted years, it's going to be a lost decade. Can't touch the U.S. There's too many empty real estate in Florida and in Nevada and Arizona. We might as well turn all these empty homes into chicken coops. And it was relentless. And of course, that was a terrific time to buy the United States. And 15 years later, here we are with exactly the same setup. QE, expansion in budget deficits. Very cheap valuations, bond yields that are so low that every Chinese institution really has no choice but now to sell bonds to buy equities. And whether your pension funds, your insurance companies, etc. And everybody is saying, no, I don't want any of that. I want some US equities. I want myself some Microsoft trading at 40 times earnings and 15 times sales because, God forbid that I look at, Alibaba or JD that are trading at roughly, just 2 times the amount of cash that they have on their balance sheets and 6 times cash flow. So the opportunity set right now in the Chinese equity market, frankly, couldn't be better. Again, interest rates have just fallen by like 75 basis points in the past 9 months, and interest rates are at record lows. This is going to be a tailwind for stock valuations for years to come, unless you believe that bond yields in China are about to shoot back up. But why would they when the central bank is out there every day buying bonds. Again, we're back to where we were in the U.S. in 2009, 2010. You just have to back up the truck and go for it. These are the conditions that you wait for, that you only get a few times in your career. Um, Very cheap valuations, very low interest rates, and massive policy support. How often do you get that trifecta in a career? If you get it 3 times in a career, you've been lucky.
You're also in the view that the US is kind of going through this inflationary boom, and therefore you're possibly expecting yields to keep on going up or keeping at a high level. And I'm wondering, like in this environment, can there be FDI inflows into China again, or capital turning to emerging markets? Because generally, one would say high rates and also a strong USD isn't that great for emerging markets, right? On the other hand, of course, we know Trump wants a weaker dollar, but how do you think that might be possible against the backdrop of his policies? Will we get to something like a Mar-a-Lago deal and something big happening between the US and China here, and a strategic weakening of the USD?
Yeah, I think that's one. You get a weaker U.S. dollar. There's many potential paths to a weaker U.S. dollar, but first, let me answer your very first question, which is, can we get FDI back into China? Can we get foreign investors interested again? Can China become investable once again after a number of years where everybody's like, oh, I'm out? Now, um, my simple answer to that question, I get that question all the time, um, is almost that I'm not sure it matters. Um, I'm not sure the answer to that question matters, because the pool of domestic savings in China is so enormous. It is so gargantuan. Um, China's trade surplus right now is running at $1 trillion a year, trillion with a T, 1,000 billions. No country in the world has ever run trade surpluses that were this big. In Germany 10 years ago, it was running trade surpluses of roughly 200 billion. Everybody was, bashing the Germans and saying, oh, this is completely out of whack, and that you're being a drain on the global economy, etc. Like $1 trillion is just absolutely mind blowing. So there's so much money there. It's just that today, confidence in China amongst the Chinese themselves has been absolutely shot, and has been shot, of course, by the fears of the trade war. It's been shocked by China's own policy mistakes regarding, too long a COVID lockdown, but perhaps also the tech crackdown and the education sector crackdown, etc. So most Chinese savers today are just sitting there in cash at the bank, which is another reason why bond yields continue to flow. Money keeps going into the banks. The banks don't know what to do with it. They go out, they buy bonds, because again, they have nothing else to do. So, deep down, um, what you need to get a proper Chinese bull market isn't that foreigners say, "Oh, this is cheap, I'm going to buy some," because foreigners will never allocate that much. It's for the locals and who's sitting on so much money to say, you know what, I need to start buying this now. The big question then becomes, okay, if that's what I'm waiting for, I'm waiting for the locals to start buying. What's going to be the catalyst that drives this? What's going to make them say, you know what, I don't want to keep the money at the bank anymore? Now, one of them might be interest rates that are low enough. This is what happened in the US. You get to interest rates that are low enough, people are like, okay, yeah, maybe I should get my money out. Another may simply be, the FOMO, the fear of missing out, um, where, equity markets grind higher, grind higher, grind higher, and, eventually, start sucking in the capital as people see their friends make money, etc., and feel, okay, I need to participate. Um, but one very, obvious catalyst is the one that you mentioned, um, the possibility of a deal with the United States. Because today, I think one of the big breaks to investment in China is the uncertainty surrounding where trade policy is going to be. If you keep hearing, oh, we're going to put 60% tariffs from the U.S. and 60% tariffs from Europe, it doesn't really want to make you invest, right? You're like, well, I don't know what the future's made of. I don't know how these companies will adapt. I'm just going to stick in cash until this is sorted. Um, so, most people, most entrepreneurs, most businessmen, um, they just want to know what the rules of the game is. And then they can say, okay, this investment makes sense or this investment doesn't make sense given the rules of the game. When you don't know what the rules are, when you don't know what the tariffs are going to be, what you're going to be allowed to export, what you're not going to be allowed to export, when you don't know these things, the default mode is to wait and see. So if we do get a sort of new Plaza Accord, what Scott Besson refers to as a Mar-a-Lago Accord, where China agrees to revalue its currency somewhat, where maybe China agrees to build a few factories in the U.S. and there's an agreement on what the tariffs are going to be and an agreement that these won't change for a number of years. Um, I think that could act as rocket fuel for the Chinese markets. It could act as a real, the light that's sets everything on fire.
That's super interesting. What about the Chinese views on that? Because I think in one of your other interviews, you argued that the Chinese government currently just watches the currency markets as the most important one. They want a strong currency or a currency that is stable because of the whole de-dollarization thing and such. But could there be a case or a scenario that you see in which Chinese equities are become at focus again? Um, for example, my moonshot here is that the Chinese government is not stupid either. They want this wealth creation. They want to bring the middle class from 400 people to 800 million people. And one way of doing that is, well, first popping the bubbles, like in real estate, which they've obviously done, shifting to manufacturing and smart industries, of course, and they're doing all of that. But I'm hoping, and I would love to hear your views on that, that they also see the equity markets or investment as part of that, playing a role in here, because wealth creation could also come from the equity markets at some point for the Chinese middle class. Of course, right now it's more like a gambling house, a casino. The Chinese stock markets are very, very volatile. But couldn't it be also some sort of long-term thinking that the Chinese always have, that they say, okay, we can take the low valuations for a while, then we set up our markets. You're in Hong Kong, build up the financial infrastructure and institutions and so on, and we'll have something that we have in the United States with institutionalized 401k buying and everything, and just getting the passive flows going and everything, and having the stock markets as a diversification out of real estate, basically, and then also this way getting the consumption going as well. I know it's maybe not really the Chinese way, as that is a bit more of the consumption behavior type driven economy that the US has, and not entirely sure if China's going there. But yeah, what are your views on that, of such scenarios for a stronger equity market driven by also the policymakers in China?
Yeah, no, look, I think there's a lot to be said for the scenario you just described, and I don't disagree with it at all. I'd add one more component. Um, I do think you're absolutely right. What you've witnessed in recent years is the birth of local pension funds um, and the big growth in people buying insurance policies. Some of these assets go into equities, etc. So there is that element which really didn't exist 10 years ago, is it's growing and it's going to keep growing every year. That is only going to go one way. And the growth of domestic pension funds, of domestic savings, etc. That's going to keep going one way. So you're absolutely right. That's an important trend to look to. I think when it comes to the policymakers today, now this could be a negative, frankly, for the equity markets, but um, there is also a pretty clear desire to get the markets higher so you can start doing more IPOs once again. Because a lot of the regions, a lot of the municipalities that are today, effectively technically bankrupt. They're not really bankrupt because they own a lot of assets, but a lot of these assets they can't liquefy, whether it be land that they can no longer sell to property developers or stakes in SOEs. Now, if you're going to move into a world in which a lot of these local authorities need to stand on their own 2 feet, the way one of the ways you get there is they basically start selling some of their stakes in the various, SOEs and companies that they own. And that's true for the Beijings, the Shanghais, but it's true for also a lot of smaller cities. Um, but that can only happen if, the stock market is halfway decent. Now you could say there's a catch 22 there because, if the stock market goes up and all these guys come out to issue a bunch of new shares, then the stock market comes right back down because you're flooding the paper with liquidity. So you're going to have to manage that whole process. Um, but there's another pretty clear incentive right there for the stock for the US, for the Chinese government to want to drive up valuations.
And how do you see the things that both governments cannot control? For example, we just had the incident with the TikTok ban. That
Yeah,
is, obviously now on Trump's table, but a very interesting phenomenon that happened, which is that most of the users are flocking into a new social media app called Xiaohongshu, which you might
yeah,
know, and
I know.
kind of starting to discover the real China, if you will. There's lots of buzz out there about these things
You've
currently,
seen
and
you've seen the meme, right? Where you've got an American guy saying, "Oh my God, I can't believe everything my government told me about China was a lie," and then you've got
yeah,
a Chinese girl that says, "Oh my God, I can't believe everything my government told me about the U.S. was true." Uh,
yeah.
I love that meme.
No, exactly. And I think these are the sort of things which I love, which are so unpredictable about everything that kind of the Biden administration really has kicked off, like these unintended consequences of banning things like TikTok, but also maybe the chip bans, where we now see things like DeepSeek kicking off in China and kind of
Yep.
training AI models on 10 times less to compute. Yeah,
What we keep having to learn over and over again is that when you build a 10-foot wall, somebody invents an 11-foot ladder every time. And we seem to be having to learn this message over and over again. And so, yeah, and it's true for China. It's like we keep trying to build these 10-foot walls around China, and before you know it, there's a bunch of 11-feet ladders.
no, exactly. And I was like referring to these social media phenomena because, for one thing, I think more people should actually go to China and see for themselves with their own eyes, because it's always so different to be on the ground. I always love to be back and, have the contrast to what's written in the headlines versus what you're actually experiencing on the ground.
The reality is when you're there, I'm sorry to interrupt, but the reality is when you're there, you can't help but shake the feeling that this is where the future is being built. This is where the new
Hmm.
cars are being built, the new trains, the new fighter planes, the new nuclear power plants, the new industrial robots. This is where China is the place where the future is being built. And we may wish that it wasn't the case, uh, but we have to live in the world as it is, not as we wish it is, not as we wish it to be. Now, I think one of my biggest complaints of the Western world is we have policymakers that act on policies that are wishful policies instead of
Hmm.
being true policies. And you've been victims of this in Germany. We've been victims of this in France. We wish for wind and solar to be great, so we're going to shut down our nuclear and rely 100% on wind and solar. And and this we wish this because it's better, and it turns out that it leaves us burning coal because that's we can't make it with we can wish wind and solar all we want. It's not enough. Um, and all this like wishful thinking has been applied to our energy policies, to our foreign policies, to our military policies. It's been one thing after another, where so much of our policies are basically just wishful thinking, that ends up, the road to hell is paved with good intentions, as we all know.
Exactly, and I'm just thinking whether or not we're actually kind of close to a tipping point here. That's why I'm mentioning these examples, like with TikTok and also DeepSeek. It seems like we've built up all of these walls, and suddenly they come down so rapidly in a manner that we didn't intend it would. And so I'm wondering, like, if you see other things in 2025 going forward that could be potential kind of black swans, or in this regard, white swans, that could really break down these barriers and turn investors but also consumers' head and the general perception. One thing that I would throw in there would possibly be the role of Europe, because now with the Trump administration, I think we possibly also have a much more China-aligned Europe again. And what are your views on that, or do you have any additional thoughts on such examples?
Yeah, I think you mentioned falling walls, um, which is always a nice topic in Germany because
Yeah.
it brings back fun memories. Um, but falling walls right now as we speak, it seems like the Chinese Great Firewall, internet firewall, is coming down because right now, you sitting in Germany or you know your listeners or anybody sitting anywhere in Europe and North America, anywhere, can now sign up for Douyin, the Chinese TikTok, um,
Yeah,
which was not possible before.
true.
You needed a Chinese IP to sign up to TikTok. And yes, you mentioned Xiaohongshu, um, and I think this reflects a new level of cultural confidence from China. I think in 2018, when we unleashed the tech, we the Western world unleashed the tech war on China and said, okay, we're not going to sell semiconductors to you anymore. I think they panicked and they thought, okay, semiconductors today, tomorrow it might be petrochems, it might be tires, it might be auto parts, it could be any one of things. So we need to be self-sufficient in everything. And so for 6 years, they stopped lending to real estate and they put all their money into lending into industry. And 6 years later, they turn around like, okay, we've now leapfrogged the West in pretty much every industry. So we're now in good shape. The West can't really mess with us all that much anymore. Um, and so maybe we can afford to be a little more relaxed. And at the same time, I think they're, rightfully quite proud of what they achieved. They want to showcase, they want to show the world, look, our cars are actually better than your cars. Our trains are better than your trains. Um, our airports are nicer than your airports. They want to show that off now. While they were building it, they were quite sensitive about it. And now all of a sudden, the great firewall, the great Chinese firewall comes down because I think it's a sign of cultural confidence and pride. It's like, look at what we've done. Look at us, kind of thing. Um, and yes, to your point, it allows people who perhaps have neither the time, the money, or the inclination to go to China to check it out with their own eyes, to perhaps get another view of China very different from the one you get in the general media, and to get it either through TikTok or Douyin or through Xiaohongshu, uh, you know, through any one of these portals. So yeah, I think that's important. It's interesting, and I think it's a bullish development because um, you know, it now that Westerners can see the progress that China's made, the obvious corollary to that is like, well, hold on, uh, what have we been doing in our countries? We've expanded our budget deficits like crazy for the past 10 years, 15 years, and what do we have to show for it? I don't. How come we don't have a new airport? How come we don't have a new high-speed rail line? How come we don't have a bunch of new ports and new university campuses and whatever else? Where did all our money go? And I say this as a Frenchman. For my whole lifetime, the government's take of GDP keeps on increasing. They keep on increasing taxes, etc., and every public service keeps on getting worse. Whether um, hospitals, schools, public security, uh, our army, you name it, it's worse than it was 10 years ago and it worse than it was 20 years ago. And I say this, as a proud Frenchman, I was an army officer, etc. And I look at the disrepair of all of our public services, and I compare that to China, and I'm absolutely appalled. Um, Now, I'm in a very small minority because most people in France don't realize the dramatic contrast between the the Chinese public services and the French ones. We still run around thinking that our national health care is the best thing in the world, and that our army is super strong, and that our school system is terrific. But the reality is, we're slipping and slipping fast. And now I think the fall of the Great Wall of China the Great Internet Wall, will make that very obvious to a lot of countries. And by the way, I
Indeed.
don't think Germany's that different from France. It's not as bad as France, but it's not that different in that
Yeah, do you
regard.
think
So
it's far enough for the Europeans to kind of wake up finally? Because we see this big movement now in the US. Obviously, that's the whole campaign. What Elon
yeah,
Musk also kicked off and started, and yeah, now we have, as you said, like this wall breaking down. But I mean, I always feel like the Europeans and are the biggest losers here. We've got Nord Stream cut off. We got the war waging on our continent. Our economies are not doing that great, but it's as always quite slow to react. But do you see that coming in 2025 and forward, that we will finally see some shifts happening?
yeah. I think the first shift actually is going to happen in Germany. Um, I don't think the Alternative for Deutschland will win the overall election, but they'll do very well. Um, and that will be a sharp wake-up call to the Christian Democrats and the Social Democrats, who likely have to build a coalition government together. And what the Christian Democrats and the Social Democrats will likely do in their coalition government is decide, okay, well, let's spend a bunch of money to make sure that people are happier and that the AfD goes away. Um, and so you'll see big infrastructure spending in Germany, much bigger budget deficits, and that will boost growth somewhat. Now, I'm not saying that this is awesome for the long term, but this will give you at least a good sugar rush for the next few years in Germany. If I look at Italy, if I look at Spain, these countries are doing well. Poland is doing well. So the two sick men of Europe are really my country and yours. Um, it's France and Germany that are not doing well within Europe. Now, Germany, I think the problem is salvageable. France is much, much more complicated. And, the big problem in France is we have a third more civil servants than you do in Germany, even though your population is 25% greater than ours. Um, we have and even though as a country you're much more decentralized, France is super centralized, Germany is super decentralized. So conceptually, you should have more civil servants because every region, has their own sort of pyramid. So it tells you, how overstaffed the French government is. Um, that we have a third more than Germany, uh, with a quarter less of the population. So that's the challenge. France, the weight of the government in France is too big. We just can't be competitive. As productive, handsome and smart as we French people are. Um, there's only so far we can do, and we've got such a heavy government to carry across the finish line.
Right, Louis. I've taken a lot of your time already, so I want to finish off
Yeah,
this video with the last point around a concrete topic here: EVs and the automotive
yeah,
industry. Obviously, when we talk about Europe now, is maybe one of the biggest part of the U.S. The Chinese European relation. And how do you see things playing out? Obviously, Chinese cars have become great. I'm personally very into the brand called Neo, because that's very German-like feeling regarding the build quality, and the stuff they're doing is, in my opinion, like from a business model perspective, really, really interesting. Despite I know they have lots of headwinds because of their battery swapping infrastructure and those sort of things. But the big question, which frankly the Chinese haven't solved as well, because they're not really successful in Europe yet, is how can they get a foot into those developed bigger markets? I think they're doing well in like Brazil and such, and China always has the global south. But do we finally see like some big global companies from China on the stage and being able to sell to those affluent users and customers in Europe and maybe even the US? What's your views on that in the future?
Um, so it's a very tough question, and I don't mean to evade it, but I think if you're China today, if you're BYD or Neo or Zeekr or Xpeng or any one of those guys, um, the path of least resistance is still to sell into emerging markets. It's still to sell into emerging markets because what you offer is really an automobile at a lower price point. Um, so you can go into, say Indonesia for the sake of argument, or Thailand or wherever, and say, what, Volkswagen was here and they were offering you a car for $25,000. we can do a car that's very similar for $10,000. Now, a doctor living in Pakistan, he might not be able to afford $25,000, but he can afford 10,000. And not only that, all these countries, when China goes to Saudi Arabia and say, "Hey, do you want cheap cars?" The Saudi kingdom is like, "Sure, love cheap cars. We'll take plenty. No, ship them in." In Europe, of course, it's like, wait, if you bring cheap cars, it's going to destroy my own car industry. And no, I don't want your cheap cars. Um, and so, I think for most of the Chinese automakers, the path of least resistance continues to be selling into emerging markets. It's just less headaches, less less government constraints. Very often, somewhat looser, um, uh, you know, safety requirements, um, and and you can address a whole new client base that has no prejudice. Today, if you've been buying BMWs in Germany, you're predisposed to buying another BMW as your next car because you have the BMW, you bring it back to the dealership, they give you a good price, and then you get another BMW, and that's how the system has always worked. Um, and so to answer, long-winded answer to your question, I still think that, you are starting to see the Chinese cars, of course, in Europe. You're starting to see BYDs everywhere. And BYD is big enough to really have a big impact and a big footprint. They're also opening up, assembly factories in Eastern Europe. So you will start to see more Chinese cars. But I think where people are blown away is when they travel to emerging markets. When they go today to Saudi Arabia, when they go today to Mexico, to Brazil, and they see Chinese cars everywhere. Um, that's where people realize, oh my God, the world has really changed. Because where I used to see Toyota, Volkswagens, and Peugeots, I now see, BYDs and Chery Automotives and Geelys and whatever else. Um, so I tend to think, to answer your question, the path of least resistance remains selling into other emerging markets much more than selling into Europe.
Right, Louis, thanks so much for your time. This was a great
Pleasure.
pleasure, and I really love to get your updated views, especially after now we've got the reality of Trump's the next president. And yeah, it was really great to get your condensed views on that, and I appreciate your time. And I hope the viewers also really enjoyed that. And hopefully smash a like, subscribe to the channel, and go to find Louis on social media. Where can we find you and your work and subscribe for your services?
Yes, well, again, thanks a bunch for having me. Uh, the easiest way to find out more about us is our website. It's at gavekal.com, Gavekal.com. And again, we do three things: research for institutional investors, institutional money management, and private wealth money management. So you can find out about that on our website. I do post every now and then on X or Twitter.
Yep.
Um,
Mhm.
that's about my only social media presence. I don't post a ton. I'll post the occasional thing. Um, and my handle is Vincent, which is my middle name. So Gav Vincent on Twitter.
Awesome. Thanks a lot.
Thank you very much.